Hello, everyone, and welcome to another quarterly webinar brought to you by Apollo Crypto. My name's Tim Johnston. I'm Managing Director, and as always, it's a delight to be joined by Henrik Andersson, Chief Investment Officer. Hi, Henrik.
Hi, Tim. Great to be here.
What a couple of months it's been in crypto. I think initially I thought this webinar was going to be quite doom and gloomy, given the events that happened in November, December. But the last couple of weeks, crypto's been on a tear and performing quite strongly. So hopefully that's a sign of things to come for the rest of the year. For those that are new to Apollo Crypto, we are a crypto asset fund manager based in Melbourne, but with people in Canberra, Sydney, and Dubai. We've been going for about 5 years. When I say about, actually pretty much exactly 5 years. We celebrated our 5th year anniversary of the launch of the Apollo Crypto Fund, our flagship fund, which launched on the 1st of Feb 2018. So it's been a wild ride over the last 5 years and indeed the last 3 months. But it's a delight to connect with our investors and followers to bring you up to speed with what we think you need to know about crypto markets. So that's very much the purpose of today. Great opportunity to hear from Henrik in particular. We love to see the questions coming through. There's generally the Q&A and the chat function. So please, if you do have any questions, fire them through. Lastly, today it's not financial advice. It's just a chat on crypto markets. So if you are interested in investing in crypto or indeed the Apollo crypto funds, please do your own research and seek your own advice. With that, we'll make a start. Henrik, what a couple of months it's been in crypto.
Yeah, very dramatic 2022, and Q4 was no exception. And standout in Q4 was the bankruptcy and collapse of FTX and Alameda. Yeah, we prepared some slides as well. I don't know if you want to
share them.
Yeah. So this is the bit of an overview of the macro picture. The chart to the left here is the past 6 months up until today. You can click on slideshow, I think, Tim.
Yeah, that's what I was looking for.
Screen. Yeah.
Is that better?
Yeah. I think it's loading. Yeah, there we go. So quite interesting. This includes kind of the performance up until today in January as well. And if you look at the last 6 months, we actually see a slightly positive performance for both Bitcoin and Ethereum, in line with S&P 500. And this is despite all the volatility in between. So as you can see in this chart, we had a big drawdown in November due to the FTX collapse. So the market have recovered from those lows, but it was a very tough 2022. And on the chart to the right, it's a comparison from the FT US bonds versus US stocks, and they go back all the way to 1871. And if you look at the combination of stocks and bonds, was one of the worst years since 1871. So on a historical scale, it was a very bad year, not just for crypto, but for other macro assets. Yeah, looking at Bitcoin, there is a very clear 4-year cycle historically when we look at Bitcoin and the crypto market. So if we look at the numbers in this table, you can see that we have 1 negative year followed by 3 positive years. So that's the 4-year cycle, as we call it. And one fundamental reason why this could be the case is that every 4 year Bitcoin's inflation is cut in half. The miner rewards are cut in half every 4 years, and that could be a fundamental driver of this pattern we have observed. And the next Bitcoin halving is due in March 2024. And as we can see, In this table, 2018 was a negative year. That's when we actually launched our first fund at Apollo Crypto. And after that followed 3 positive years. And last year was a negative year. And I think actually this has a good chance of repeating itself. Sentiment has changed quite a bit from last year already, it feels like.
And the other thing to comment about the negative years, Henrik, is that they're not just negative, they're pretty severe. So 2014, minus 61%, 2018, minus 73%, and last year, as we know as well, minus 64%. So it's not just a minus 15 or a minus 20. They are pretty severe.
Absolutely, and you could say the upside is there as well. We have seen several years here with above 100% positive years. So the volatility is definitely there in crypto, and I think could work to your advantage as well, that kind of volatility. But I think, as you say, the drawdowns are quite severe as well. And if you're a long-term investor, I guess it's important not to kind of panic when we have these negative years. If you have a long-term belief in the asset class, you will gain the profits in the years to follow. So, and I think that's what we have mentioned a few times, Tim, that we are pretty proud of our investor base that have stayed with us even in the bad years like last year.
Yeah, that's right. And I haven't looked at the numbers more recently. We've had a few redemptions come in, nothing significant in the last couple of months. But sort of midway through last year, I did the numbers for the Apollo Crypto Fund, and I think we had 8 full-time redemptions out of about 400 or 450 investors, including that 2018 period. So I think most of our investors understand investing in crypto or our funds for 3 or 6 months is not necessarily the best way to do it. But that longer term time frame I think is very important.
Yeah, absolutely. And we can go to the next slide. So yes, a little bit of a summary of Q4. I think again the standout sort of event was obviously the FTX Alameda. It was one of the biggest premier crypto exchanges out there. And they did file for bankruptcy and collapse. I don't think we have to dwell on it too much. I think it's been very well covered, and I think we have been talking about it as well through our newsletter and elsewhere. But that has passed now. We have seen some follow-on events as well. There has been some uncertainty around Genesis, for example, but they recently filed for bankruptcy. The market didn't react very much on Genesis filing for bankruptcy. It was quite well flagged, and that's probably a positive sign as well, that the market did not react negatively on that news. I think otherwise in Q4, one observation is the very strong performance of some on-chain derivatives protocols, and that could actually be also on the back of the FTX bankruptcy. With on-chain derivatives, you don't have that counterparty risk, and that could create a boost for that segment of the market, the on-chain derivative markets that could replace some of the centralized players like FTX. So we have seen tokens in our portfolio like GMX, like DYDX, like Lyra on the option side perform very strongly recently. And that sort of those projects are trying to solve the problem and the counterparty risk with players like FTX. So they actually, I believe, looking more interesting, got a boost, is a good narrative on the back of the FTX bankruptcy. So that's interesting, and that's something we have talked about for for a long time, and something we have actively invested in for almost a couple of years now. So that was interesting to see. It was a little bit more quiet in Q4 when it comes to our primary investments. I think the market was caught up in the FTX bankruptcy, and I don't think many investors had the bandwidth to necessarily look at many primary investments during the Q4 quarter. So it was a little bit slower, but we do expect to get back to kind of a run rate with around one primary investment per month going forward, and we have a number of them in our pipeline as well. Valuation when it comes to primary markets have come down, which is a positive sign. It tends to lag kind of the liquid market, but I think you can find high quality primary deals in the 10 to 20 million fully diluted valuation today. So definitely have come down from higher levels earlier in the year. That's a good sign. And when it comes to our positioning, we were very conservatively positioned for a large portion of the last year, and especially around the FTX bankruptcy. But we did sort of cover some of those portfolio hedges going into December, and we also are actively deploying more capital. So we have been able to take advantage of the run up in the market we have seen after Q4 in January, which is a good thing. And I think that's sort of our playbook for the coming year, is to be a bit more constructive when it comes to the market, a bit more bullish, you could say. I think the playbook in general, as I look at it, is to kind of buy weakness in the market. If last year was a year where you sold strength, I think this year is probably the year where you buy on weakness. I don't expect new all-time high in the market or anything like that, but overall, I expect 2023 to be a positive year. And I think on the next slide, we have some outlook as well for the market. Can talk about
just on that, Henrik, before we move to the next slide. So could you just elaborate a little bit more on what you mean, sort of being more constructive? So with the Apollo Crypto Fund, we've got an allocation to market neutral strategies, which is the defensive side of the portfolio. So does that mean sort of reducing that allocation and increasing the allocation to other things? And are there any sort of logical starting points for what those other things are?
Yeah, when we tend to allocate some of that cash, if you like, or that some of that market neutral a portion of the portfolio, we tend to start with I guess the less speculative assets. So some of the blue chips is usually where we start allocating to, and we have taken down that market neutral weight in the portfolio from a quite high level at around 35% to more close to 20%. That's a combination of our deploying capital as well as we've seen the run up in the market, which obviously naturally reduces that market neutral portion of the portfolio. So that's a combination. But yeah, we usually start with sort of more of the blue chip assets that we have more confidence around in the beginning of potentially a bull market.
Yeah, sure. Just got a quick question here from Dan. Again, please keep those questions coming through. So Dan just asked how was performance in January. So just an estimate at this stage. The estimate for the Apollo Crypto Fund is around about 19%. The estimate for the Apollo Crypto Frontier Fund, which is our more directional new projects fund, is about 35%. And the estimate for the market neutral fund is about 0.4 to 0.5%. So it looks like a great start to 2023.
Yeah, some of the outlook, and maybe worth mentioning as well, we recently posted a some predictions for the coming year. So you can check that out on apollocrypto.com under I think it's under insights. So we talked about the 4-year cycle. Looks like it will hold true. I expect this year to be a positive year. We have seen a change in sentiment. I mentioned Genesis filed for bankruptcy in January. Market didn't really react negatively to that. I think that's always a positive sign in a market when we don't see the market reacting negatively to an event like that. I think the macro picture has changed a little bit as well when it comes to the tightening cycle. So that was a big driver of the negative returns in many assets in 2022, that the central banks around the world were hiking interest rate quite aggressively. And that looks like it's might be coming to an end. The Federal Reserve last night announced a 25 basis point hike. Last hikes have been 50 basis points, so they're going a bit more carefully, and they are signaling that there might only be 2 more hikes, so another 25 basis points hikes potentially coming from the Federal Reserve. They also said in their commentary that they are seeing disinflationary signs, so inflation coming down. So they might be close to the peak in interest rates, which is a positive sign for the market. And we saw the market after the announcement react positively as well. So the macro sentiment is changing that way. We're also seeing the end of the COVID lockdowns, and more recently, China is opening up as well. We should help the global sentiment. So the macro picture is improving. We had a very, very negative year, I think, when it comes to the crypto markets. My guess would be that most investors that wanted to sell or reduce exposure to crypto have done so already. So we don't see that selling pressure in the market. Doesn't mean that every month will be a positive month. I expect a lot of volatility ahead. But overall, I think it's looking a little bit better for the market. So that's the first thing, and maybe the most important one. And then when it comes to kind of narratives we're seeing in the market, I think Ethereum is continues to be the main developer platform for Web3. So Ethereum had a big year last year. They moved to proof of stake. I think this year we will see a lot of layer 2s go to market and increase a lot of in adoption. And just stepping back a little bit, layer 2s are the scaling solution for Ethereum, making transactions much cheaper, while still inherit the security of the Ethereum blockchain, which is one of the most considered one of the most secure blockchains out there. So I think that's a big narrative, and that's something we are actively investing in, and that will enable crypto to scale to many more people. So that's exciting. With proof of stake that was introduced last year, Ethereum managed to reduce the inflation by around 90%. And together with the ongoing burn of some of the transaction fees, there is a good chance that Ethereum will be deflationary as an asset for in 2023. So that's also a big economic, if you like, change to Ethereum. So continue to be a positive on the Ethereum ecosystem. When it comes to use cases, NFTs, we believe will continue to be a strong use case. We have seen a lot of big brands going into the NFT space, and that interest seems to continue. And I think we might see more use cases when it comes to NFTs pop up as well, especially things like gaming, which hasn't really taken off so far, but there's a lot of development happening there. We believe that there is a good chance that there will be a narrative around the combination around DeFi and NFTs. And what we mean by that are, for example, platforms that enables you to earn a yield on your NFTs, to lend out your NFT, or to speculate on NFT through derivatives. And we have invested recently in a number of those platforms that are targeting that intersection, if you like, between the NFT market and the DeFi market. Lastly, I think there's a chance that we will see more large corporations entering the crypto space. There have been some rumors more recently around Amazon, if they're going to do something in the crypto space, perhaps around NFTs again. We'll have to see how that plays out. Also, Twitter, there's rumors that Twitter is trying to be this payment app as well, and stable coins and crypto could be a natural fit when it comes to that. And we've also seen some institutions continue to roll out crypto products, and in Q4 we saw Fidelity launch their retail offering to their 40 million clients in the US. That's a platform where you as a client can buy crypto. So that's good to see blue chip institutions like Fidelity embracing this space.
Excellent. Thank you, Henrik. Bit lighter on the questions for this webinar. So if anyone has questions, I think now would be a great time to chip in. I've got one to kick things off. Henrik, I guess to me, I'd say sort of January's performance is probably pretty unexpected, given that November was quite bleak and December was pretty quiet. Do we have any sort of special insights into any special sort of reasons as to why it may be a sudden turnaround, or is it just maybe a changing of the tides and changing of the macroeconomic picture as you described?
Yeah, I think macro has a lot to do with it. We saw, for example, tech stocks doing very well as well. That's a risk on assets. So I think there has been a change in sentiment from that perspective, if you like. I think it's driven from central banks being less hawkish. So I think it's related to that, and also crypto had a really tough 2022. So taking back some of that ground, I guess, made sense. And I think there's also some money chasing the returns. So obviously the last 12 months in crypto had scared a lot of people. Some people went perhaps short, some people sold out. And when the tide turns, there is a race to kind of get back in, if you like. So I think you have some of that as well.
Great. And a question on that, on the macro from Adam. There are many mixed signals and mixed narratives about how bullish or bearish we should be about risk on assets, including crypto. What's our approach there, Henrik?
Yeah, we wouldn't necessarily chase returns. So we're not in that camp. A day like today, we got 25 basis points. We got the comments from Fed. We are happy to see the performance in the crypto market today, but today we're not going out buying crypto. We rather buy on pullbacks. So still have we're not all out bullish, if you like. We expect a positive year, but our playbook is buying weakness.
Yeah, thank you. And another sort of question on that topic from Dan again. What does the market need to see before the correlation to risk on in markets falls and fundamentals take over?
Yeah, that's a good question. I don't know. Maybe Tim, you have some things, some thoughts about that as well. You've done some studies on correlation in the past as well.
Yeah, I have. I think it's a really interesting topic, and our narrative and view on this has changed over time. We initially said crypto doesn't correlate. We now say that crypto tends not to correlate. We now know that crypto. I think when people talk about correlations, they're probably most interested in assets that act as a hedge. So if everything else is going down, can we have some sort of exposure to something that's going up? But I think we've got enough data now to unfortunately say that crypto doesn't do that. There used to be the narrative that Bitcoin would be the hedge, and the macroeconomic environment would struggle and Bitcoin would perform beautifully. But that's clearly not the case. So I am actually due to update the crypto correlation data, which I do about once a year. What that has said, and I think it will say again, is that over a longer period of time, crypto correlation to traditional markets is still pretty low. But is that sort of helpful to investors in times when it sort of spikes, but you wish it were low? So I think, I guess my view is, which is probably as good as anyone's really, is that I think we just probably need a little bit less noise. There's been a lot of discussion about macro. Everything's been about macro over the past 12 months and focused on interest rates in particular. I think once that quietens down, I think we can sort of focus more on the fundamentals of crypto assets, and equity markets can focus more on the fundamentals of equity markets. And I can see why it's been a big 12 months. I mean, we've had inflation go from 0 or effectively nothing to 8%, and that's a pretty drastic event. So you can see why it's happened, and hopefully that'll sort of normalize and stabilize. A couple of questions. Cameron asks, what are your views on the latest Bitcoin BIPs? So Bitcoin improvement protocols, if I'm correct, like Taproot and Taro on Bitcoin layer 1, and also opening up smart contract capability, along with the explosion of the Lightning Network for payments and value transfer cross-border. Yeah,
absolutely. So Taproot was probably one of the biggest upgrades to Bitcoin after SegWit. We haven't seen much adoption of Taproot, so that's a new upgrade to Bitcoin that enables another type of signatures. Might make Bitcoin a bit more private in some instances. And we've recently seen some NFTs on Bitcoin that are using that fee discount that Taproot transactions has for NFTs, which have by some people a negative effect on Bitcoin because it's filling up the Bitcoin blocks. So some Bitcoiners don't like that use case, and sort of NFTs using that extra block space, if you like. But it's a free market, and it's they can use it if they like, it's hard to censor transactions, and that's not something we want to see. So if people want to use NFTs on Bitcoin, that's probably likely to continue. But that's something that has happened in the last couple of weeks, so pretty new. So far, we haven't seen much adoption of NFTs or DeFi on Bitcoin. It's mainly used for store value, if you like, digital gold. We haven't really, I sort of disagree a little bit with Cameron here. I don't think we have seen an explosion of the Lightning Network. Happy to be proven wrong on that, but I think the big payments are happening with stable coins on Ethereum and other smart contract blockchains. The stable coin market has really found a product market fit, and that market is continuing to grow a lot. So far, it's not really happening on Bitcoin.
Thank you, Henrik. Jenna and Michael have a similar question on regulation. So a bit of an update on the regulation side, and Michael specifically asks if some of the regulation in the States is likely to impact the assets in our portfolios.
Yeah, we haven't seen much coming out of the US. To be fair, there has been some talks about new regulations coming, but we haven't seen that. I think it's likely that we will see regulation, especially when it comes to crypto exchanges after the collapse of FTX, and that's probably a good thing if consumers can feel more secure with the exchanges that they trade on. So, you could, on the other hand, argue that FTX and other exchanges have been regulated, and the regulation hasn't really helped. But if there's more disclosures and those kind of requirements, that's probably a good thing.
Yeah, thank you. Question before I get to a few others. Thanks for the questions. Got lots coming through, which is great. Would we consider sheltering in fiat currency when you know crypto is going to dive? Well, first of all, I think it would be hard to predict exactly when crypto is going to dive. But I'll let you take this one, Henrik. Crypto seems to be the second place to invest versus traditional markets, and vice versa to exiting when things go bad.
Yeah, I think I didn't really understand about the second place. So far, I think crypto has been leading other markets. It's trading 24/7. It's sort of an easy market to access, and I think we have seen some sign, especially during last year, that crypto has really been leading other markets when it comes to price movements. Of course, we would like to go all cash if we had a crystal ball and knew what the market was going to do. We do try to position much more conservatively in the bearish market, and I think that's what we have done historically. Not necessarily going to fiat, but increasing that market neutral exposure where we still can earn a yield using stablecoins and other instruments.
Yeah, and I've heard that point about, and I think where the question might have been going is, why would you bother investing in crypto if it's going to be hit really heavily when things go down, but and so equities go down as well. But then when things go up and equities is going to go up, well, then crypto might go up a little bit more. I think there's 2 points to that. One, I think it comes back to that correlation, which we can't crystal ball, but I think there's still a sound theoretical reason there that correlations should normalize and decrease over time, so it won't be perfectly correlated. And I think secondly, I think you can flip that the other way. You could say, why invest in equities? Well, if crypto is going to perform really, really well and really, really strongly, and you saw some of the numbers on that you presented throughout the webinar, Henrik, where you've had some years return 300%, or I think there was even a 1300%. And then when crypto goes down, it's going to go down 60 or so percent, and equities might go down 40. Well, if you can stomach that volatility, then why invest in equities? So I think you can flip that around. I'm certainly not suggesting that people do that, but it is an interesting sort of thought experiment.
Yeah, I agree with that. I think it's fair to say that crypto has performed better than many other asset classes over time.
Okay, a couple of asset-specific questions, which we love, getting into the weeds a little bit. G'day, Brett. Thank you for your question. Love your thoughts on IMX, Immutable X, and its price suppression to date. Good buying at these levels? ?
Yeah, we don't usually comment on if the specific asset is a good buying at a certain point in time. AMX is an asset we do hold in the portfolio. It's an L2 a platform for NFTs, NFT marketplaces, and they're working on other NFT related projects as well, like Web3 ID for gaming and other things. It's a portfolio asset. We have positive outlook on it. If you believe in the NFT market, that's one asset you will want to hold. among many other assets in that basket.
Yeah, thank you, Brad. Another couple of specific questions. So from Boone, what was your rationale behind your investment in Swell Network? So we wrote a paper on that, Boone, which will be on the website under research reports. And how does it differentiate itself from other liquid staking protocols that are currently launched, like Rocket Pool and FXS?
Yeah, we started investing into Swell early last year. We're one of the founding investors into Swell. It's an Australian liquid staking project focusing on Ethereum. Interestingly, liquid staking has had a really strong narrative more recently. So I think Swell will do quite well as well. They are focusing on being more decentralized versus some of the other liquid staking protocols. So that's how they are a little bit different. I think there's also a need in the market for many different liquid staking protocols, because today, for example, Lido is quite dominant. And I think there is an appetite and a need for many more players in that market. So we're still very bullish on Swell, and looking forward to them launching mainnet very soon.
Richie, interesting question. What's your strategy with the Apollo Crypto Fund moving forward in 2023 to recouping the losses that we experienced in 2022? So I think there's an interesting point there just to make clear to everyone. So our funds are open-ended, which means investors can come and go whenever they like. Some other crypto funds, the sort of lock-up periods and whatnot. So we have investors that have invested in day one that would still be up significantly, but we might have we do have a number of investors that say invested towards the end of 2021 or even early 2022 that would be down significantly. So how do we look to recoup the losses, Henrik?
Yeah, our job is to outperform the crypto markets over time. So Apollo Crypto Fund has a 5-year track record now, as you mentioned before, Tim. And when we look at Apollo Crypto Fund versus, for example, Bitcoin, it has outperformed Bitcoin by close to 100% since inception. So that's our job, continues to be our focus to outperform the crypto market. So we expect the market to improve in this year and going forward. That's no guarantee that it will improve, but that's our current outlook, looking at the sentiment in the crypto market. So as the market improves, we hope to be able to continue to, over time, outperform the crypto market. So if crypto adoption continues, as we have seen in the past, I do expect the losses I do expect us to be able to recoup the losses over time.
Yeah, and I think the other thing to point out there, Richie, is when analysing fund managers and funds, you've actually got to be careful of the suggestion of trying to recoup losses, because what you don't want a fund manager to do is to change their style, change their approach drastically to try to recoup losses, when in doing that they might just make things a lot worse. So there's a thing there called style drift, where if you invest in a particular way, you drift into another way because that sort of hadn't been working, and as I said, it can make things a lot worse. So I think we focus on what we can control. We can't control crypto markets. We cannot control the implosion of FTX and the seemingly criminal activity that happened there. But what we can control, we'll focus on that. And I think last question. Thank you for the questions, everyone. They've been great, very interesting. Speaking of FTX, one of your competitors had 75% of its assets on FTX. Question says has 75%. I'll probably use past tense there, but may still be present. What does your counterparty risk look like versus cold wallets and hot storage and our security setup, Henrik?
Yeah, so if you look at the Apollo Crypto Fund, for example, which is our flagship fund, 97% of our assets currently are on Coinbase custody and Fireblocks. So Fireblocks is the institutional private key management system. So our exchange counterparty risk is fairly low.
And I think I've thought about that a little bit. I think you still need to put a bit of trust, as people did put trust in FTX. We probably still rely and trust a little bit on Coinbase custody and the software behind Fireblocks. I think that's just part of investing in crypto, unless you want to sort of do it all yourself. But where FTX was a newer company and had obviously a affiliated trading arm, and was highly successful up until it wasn't. Coinbase custody, Coinbase as a company has been going since I think 2012, 2013, never been hacked, seems a little bit more robust than arguably FTX. Easy to say that looking back now, we know what happened with FTX, but I think we're pretty comfortable with the security set up with the providers that we use. Excellent. Well, thank you, Henrik. Thank you, everyone, for attending. Yeah, I appreciate the questions, and as always, we look forward to bringing you the latest with the newsletter. We are very open, so if anyone has any follow-up questions, feel free to reach out. Henrik, thank you for your insights.
Thank you, Tim, and thank you everyone who participated.
And we look forward to catching up next time. Bye.